Hello and welcome to AI Market News by LM. This video's audio is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Okay, let's dive in. Today is October 29th, 2025, and wow, the global market is really holding its breath. We've got huge moves happening with central banks, some really high-stakes geopolitical talks, and a whole flood of corporate news all hitting at the same time. This is definitely a day we need to be watching closely.
So, the whole world is watching, but what for exactly? What's all the fuss about? Well, today is just packed with these pivotal events. And honestly, each one has the power to send some serious ripples through the financial world. So let's break down the key forces at play. It really all boils down to these three massive drivers. First up, the US Federal Reserve is on the verge of announcing its latest interest rate decision. Then, you've got President Trump in Asia for some absolutely critical talks with China. And on top of all that, a wave of major corporate headlines is just adding another layer of action to the mix. Okay, first up, let's talk about the Federal Reserve. Now, you might hear some analysts calling this a boring meeting, but don't let that fool you. The market's focus on this announcement is incredibly intense. That's right, the big FOMC decision is coming down the pike today. This is the moment we find out the new direction for interest rates, which, as we know, influences borrowing costs for pretty much everything and everyone across the entire economy. So, here's the real kicker. The market isn't just hoping for a rate cut, it's completely expecting it. I mean, look at this number from the CME FedWatch tool. Traders are pricing in a massive 92.4% probability of a quarter-point cut. That's 25 basis points or a 0.25% drop. In the market size, this thing is a done deal. And this quote from an analyst just nails the paradox perfectly. They said, the meeting itself feels boring because the outcome seems so certain. But what this really shows us is the market psychology right now. It seems investors are just locked into the story of easier money, and they're going to keep pushing for more cuts until some big piece of data forces them to think differently.
All right, let's pivot from monetary policy to the world of geopolitics because our second major story is a big one. We're shifting our focus to South Korea, where President Trump is for the APEC summit, and the signals he's sending on US-China relations are causing quite a stir. This is the quote that has everyone talking. On his way over there, President Trump explicitly linked lowering trade tariffs to China, helping out with the fentanyl crisis. This is a potentially huge shift, tying economic policy directly to a major public health and security issue. And this just puts that change in stark contrast. We're seeing a move away from a very broad, tough-on-China stance with high tariffs and tight tech controls towards something, well, a bit more nuanced. There are signals that some tariffs could get cut in half, and maybe even more importantly, a new openness to talking about China getting access to cutting-edge AI technology. And yeah, let's zoom in on this because this could be a total game changer. The idea that President Trump would even discuss allowing China access to Nvidia's Blackwell GPUs? I mean, these are the most advanced AI chips on the planet. For a long time, access to them has been a major flashpoint in this so-called tech Cold War. Granting it would be a huge step. Okay, so beyond the Fed and geopolitics, the corporate world is just buzzing with activity today. Let's do a quick lightning round of some of the key headlines that are also shaping what's going on in the markets. Over in Japan, the Nikkei index soared past 51,000 for the first time ever. That's a massive milestone. But here's the catch. If we look under the hood, the rally seems incredibly narrow. On a day the index jumped over 2%, only 43 of the stocks in it actually went up. The gains are really concentrated in just a handful of AI-related tech giants, which suggests this record high might be a little more fragile than it looks. And speaking of AI giants, you just can't keep Nvidia out of the news. The company just announced a new system called NVQ-Link, and it's designed to connect its powerful AI chips directly with quantum computers. This is a monumental step toward creating the next generation of hybrid supercomputers. It's really wild stuff. And let's hop across the Atlantic, because there's good news coming out of the European banking sector. Deutsche Bank reported record third-quarter profits, just smashing expectations. And what was the key driver? A massive 19% surge in their bond trading revenue compared to last year. That shows some real strength and momentum. So, let's pull it all together. We have a Fed that seems ready to cut rates, we have shifting US-China relations, and this whirlwind of corporate news. What does it all mean for the market's mood? How are investors actually feeling about all this? To answer that, we really need to understand market sentiment. It's not just about the numbers on a screen. It's about the collective psychology of all of us investors. Are we feeling fearful and cautious, or are we feeling greedy and ready to take on more risk? We can get a sense of this by looking at a few key indicators.
And what's really interesting today is that the signals are just all over the place. It's like the market has a split personality. Volatility, a classic sign of fear, is definitely elevated. But at the exact same time, we're seeing really strong demand for high-risk junk bonds. And market momentum is positive, with indexes like the S&P 500 trading strong. Those are classic signals of greed. So we've got fear and greed at the same time.
And that leaves us with the central question of the day, doesn't it? We have all these powerful tailwinds, potential rate cuts, a possible thaw in the trade war, this continuing AI boom. But that undercurrent of anxiety is still there. So, what do we think is the dominant force driving the markets right now? Is it fear or is it greed? Thanks for watching. Don't forget to like and subscribe.